All right, so you wanted to learn about how ancient Japanese rice traders used charts to try and predict the future of rice prices.
Yeah, this is going to be fun.
And we're going to do that by diving into a book by Steve Nison called Japanese Candlestick Charting Techniques.
It's classic.
Yeah, and these techniques are surprisingly still relevant today in modern financial markets.
Oh, yeah, absolutely. These patterns that were developed centuries ago, they can really offer some interesting insights into the psychology of the markets and,
Oh, yeah.
help us understand how buyers and sellers are interacting.
Okay, cool. So for anyone who's new to this, can you explain just very briefly what candlestick charting is and how it's different from just looking at a regular line chart?
So imagine a line chart, the ones with just points, but instead of points, you have these rectangular shapes.
Okay.
We call those candlesticks. And each candlestick captures 4 key pieces of price data
Right.
for a specific time frame. So we got the opening price, the closing price, the highest price during that period, and the lowest price.
So instead of just seeing if the price went up or down on the day, you get a much richer picture of how the price actually moved during that whole period.
You got it. You see the full story. You see the battles fought and won by the bulls and the bears.
Nice.
Makes it much more visually engaging and informative than a simple line chart.
For sure. So let's break down like the anatomy of a candlestick. We hear all this stuff about the real body and the shadows. What are those?
Yeah, so think of the real body as like the core of the candlestick.
Okay.
It's that thick rectangular part.
Uh-huh.
And that shows you the range between the opening and closing prices. So if the closing price is higher than the opening price,
Yeah.
the body is typically white or green, indicating a bullish period.
Gotcha.
And if the close is lower than the open, then the body is usually black or red, signaling a bearish period.
So just at a glance, you can immediately tell who won that day's trading session.
Exactly. Who's in control, the buyers or the sellers?
Cool. Okay, and what about those lines sticking out from the body, the shadows or the wicks?
Yeah, so those reveal the high and low points that the price reached during that period.
Okay.
And, they can tell a story even if the opening and closing prices were close together.
Interesting.
So, for example, a long upper shadow with a small body might indicate that buyers tried to push the price higher,
Okay.
but sellers overpowered them and drove it back down.
Oh, so it's like the shadows are showing us the extent of the price swings within that period.
Exactly, giving us more clues about the market sentiment.
Okay.
And that's kind of what makes candlestick patterns so powerful. They can kind of foreshadow potential shifts in momentum
Right.
and help us anticipate market turns.
Okay, so this is where it gets really interesting. Nison's book dives into a bunch of specific candlestick patterns
Yeah,
with really interesting names like the hammer and the shooting star.
it does sound more like astrology than finance.
I know.
But these patterns represent recurring formations,
Yeah.
observed over centuries of market data,
Uh,
and they offer valuable insights into potential turning points.
So, for example, the hammer, it almost sounds like literally the market's trying to hammer out a bottom.
Yeah, picture a candlestick with a small body at the top and a long lower shadow.
Okay.
And it usually appears after a downtrend,
Right.
suggests that sellers tried to push the price lower, but then buyers came in with force and drove the price back up.
So you're looking for that small body at the top, like a little hammerhead.
Yeah.
And that long lower shadow is like the hammer's handle.
Exactly.
Okay, cool. Now imagine the opposite scenario. A candlestick with a small body at the bottom and a long upper shadow.
There you go. That's the shooting star.
Okay.
Often forms after an uptrend. Indicates that buyers initially pushed the price higher,
Okay.
but then strong selling pressure emerged, dragging the price back down.
So it's like the market shot for the stars but came crashing back to earth.
Exactly. Candlesticks are all about that visual storytelling.
Yeah, that's a good way to put it. And those are just two like basic examples.
Right.
But Nison's book explores dozens more of these patterns,
Yeah.
each offering unique insights into the battle between buyers and sellers. This is cool. We've got the hammer for potential bottoms, the shooting star for potential tops. Any other really visually striking patterns you can share before we move on?
Oh, yeah, absolutely. Let's talk about engulfing patterns.
Okay.
These involve 2 candlesticks,
Yeah.
and they can signal powerful reversals.
Gotcha.
So imagine a small red candlestick followed by a much larger green candlestick that completely swallows it up.
Whoa.
That's a bullish engulfing pattern.
So it's like the bulls came in and just devoured the bears.
You could say that. It's a really visually striking indication of a potential shift in power dynamics.
Very cool. I can see how understanding these visual clues could give traders an edge in the market.
Yeah, definitely they can add another dimension to your analysis.
Okay.
It's important to remember, though, candlestick patterns are not foolproof.
Right,
They're not crystal balls.
of course.
And they work best when combined with other tools and techniques.
All right, well, we've got a lot more to cover in part two, including how to use these patterns in real-world trading.
Exactly. We'll explore how to integrate candlestick signals with other indicators and talk about some common pitfalls to avoid.
Awesome. Can't wait. Stay tuned for part two of our deep dive into candlestick charting.
Hmm.
Okay, so we're back and ready to continue exploring these Japanese candlestick patterns.
Yeah, it's like learning a new language, right? We learn the alphabet, and now we can start forming words and sentences.
Okay, so we've identified some of those key patterns, the
Mhm.
hammer, the shooting star, those engulfing patterns, but how do we actually use them in like the real world? I mean, it can't be as simple as just spotting a hammer on the chart and then assuming that the price is going to shoot up, right?
Right. Context is everything. Just like you wouldn't try to interpret a single word without understanding the sentence that it's in, you got to analyze these candlestick patterns within the broader market context.
Okay, so what are some of those factors that we should be considering?
So first and foremost, the trend. Is the market in an uptrend, a downtrend, or is it moving sideways? A bullish hammer pattern, for example, might carry more weight in a downtrend where it could signal a potential reversal, but it might be less significant in an uptrend where the price is already moving in the desired direction.
So it's like the hammer's trying to stop that falling motion and potentially reverse the trend.
Exactly. Another crucial factor is volume. Does the volume support the price action suggested by the candlestick pattern?
Yeah.
So for instance, if you see a bullish engulfing pattern with increasing volume, that strengthens the signal, right? It suggests conviction behind the buying, indicating a higher probability of the price continuing upwards.
So we're looking for that confirmation that the volume is validating what the candlestick is telling us.
Hmm?
What about other technical indicators? How do those fit into the picture?
Yeah, so they can provide valuable confirmation or contradiction to the signals suggested by the candlestick patterns. For example, if you see a bearish shooting star pattern near a resistance level on the chart, and the RSI is showing overbought conditions, that creates a much stronger bearish signal than a shooting star in isolation.
So it sounds like we're piecing together a puzzle here. We're using these candlestick patterns as clues alongside other indicators like volume and trend lines and oscillators to get a more complete picture.
You got it. Candlestick patterns are a valuable tool, but they work best as part of a comprehensive analysis. Now, you mentioned wanting to explore some more complex patterns. Have you come across the 3 candlestick patterns in Nison's book?
Yes, I'm very intrigued by these 3 candlestick patterns. They seem to tell like a more intricate story, like a little mini drama unfolding on the chart. What can you tell us about those?
Yeah, they offer even more nuanced insights into this ongoing struggle between the bulls and the bears. So let's start with the morning star. This pattern typically occurs after a downtrend and signals a potential reversal to the upside.
Ooh, I like that name, Morningstar.
Yeah.
Like a beacon of hope after a period of darkness. How does that actually look on the chart?
So imagine a long red candlestick representing the downtrend. Then a small-bodied candlestick, either red or green, gaps down. This small candlestick, often called a doji, signals indecision in the market. And then finally, you have a long green candlestick that closes well into the body of the first red candlestick, showing the buyers taking charge.
So it's like the bulls are pushing away that darkness and a new dawn is breaking.
That's a great way to visualize it. The morning star suggests that selling pressure is waning and buyers are starting to gain control, potentially leading to an uptrend.
And of course, there's a bearish counterpart to the Morningstar,
Oh,
something a bit more ominous sounding.
yeah, the evening star. It's essentially the opposite of the morning star, signaling a potential reversal from an uptrend to a downtrend.
So instead of a sunrise, we have a sunset.
Exactly. Marking the end of the bullish run. So you would see a long green candlestick representing the uptrend. Then a small-bodied doji gaps up again, signaling indecision, a pause in the upward momentum. And then finally, you have a long red candlestick that closes well into the body of the first green candlestick, showing the bears taking control.
Interesting. Okay, so these patterns are providing a narrative for what's happening in the market. Are there any other 3 candlestick patterns that you think are particularly interesting?
Yeah, the abandoned baby patterns are pretty striking. They involve 3 candlesticks, with gaps between the first and the second and third candlesticks, making the middle candlestick look isolated or abandoned.
So it's like a little candle all alone in the darkness, unsure which way to turn.
You got it. Now, depending on the direction of the gaps and the color of the candlesticks, you have either a bullish or a bearish abandoned baby. So a bullish abandoned baby typically occurs in a downtrend. You see a long red candlestick, then a gap down to a small-bodied doji that's isolated, followed by a gap up to a long green candlestick. This indicates a strong reversal to the upside.
So it's like the buyers saw that abandoned doji as a sign of weakness and seized the opportunity to push the price back up.
Precisely. The bullish abandoned baby can signal a powerful shift in momentum. Conversely, the bearish abandoned baby occurs in an uptrend. You see a long green candlestick, then a gap up to an isolated doji, followed by a gap down to a long red candlestick. This suggests a strong reversal to the downside.
So it seems like these abandoned baby patterns are like pretty rare, but powerful signals of potential trend reversals.
Yeah, they're certainly more dramatic than the single or double candlestick patterns and often highlight significant shifts in market sentiment. But remember, even these powerful patterns need confirmation from other indicators and the overall market context.
So it's all about combining these visual clues with our other tools and techniques to develop a really comprehensive understanding of what's happening in the market.
That's right. We've covered a lot of ground in this deep dive, from the basic anatomy of candlesticks to some of these more complex patterns. But remember, this is just a glimpse into the world of candlestick charting.
It feels like we've unlocked a secret code, but there's still so much more to discover.
There is, but this is a great foundation. Now it's up to you to keep exploring and see how you can use these techniques to gain a deeper understanding of the markets. In part 3, we'll discuss some of the common mistakes traders make when using candlestick patterns and how to avoid them.
Okay, so we've been on quite a journey exploring this world of candlestick charting. And I think now it's time to talk about actually applying this ancient wisdom to modern markets.
Yeah, we've covered a lot, from the basics to those, really cool patterns like the morning star and the abandoned baby.
Right. You've given us this powerful set of tools. But I imagine there's some common pitfalls that we should be aware of. What are some mistakes that traders often make when using these candlestick patterns?
I think one of the biggest mistakes is relying solely on candlestick patterns without considering other factors.
Yeah.
It's like trying to navigate a city with just a map but no knowledge of traffic lights, one-way streets, or construction detours.
Right. So it's not enough to just memorize the patterns. You need to understand that broader market context.
Exactly. Candlestick patterns are most effective when used in conjunction with other forms of analysis, like your trend lines, your moving averages, your technical indicators.
They provide clues, not guarantees.
Exactly. And another potential trap, as we discussed earlier, is ignoring the time frame.
Yeah.
A bullish engulfing pattern on a daily chart might look very different on a weekly or monthly chart.
Right. So the time frame you choose should align with your trading goals. Are you a day trader looking for quick moves, or a long-term investor focused on those broader trends?
Yeah. And another common mistake is overcomplicating things. Some traders get caught up in trying to identify every obscure candlestick pattern or combination, and they lose sight of the bigger picture.
It's like trying to read a novel by analyzing every single punctuation mark instead of focusing on the story itself.
Precisely. Start with the basics. Master those core patterns and understand how they behave in different market conditions. Then you can gradually expand your knowledge.
And don't be afraid to make mistakes along the way.
And of course, every misstep is a learning opportunity. Trading is a continuous learning process. The more you practice, the better you'll become at interpreting those signals and integrating them into your overall analysis.
Speaking of practice, what's the best way to get started? Should you be staring at charts for hours on end trying to spot every hammer and shooting star?
Well, studying charts is important, but it's not just about spotting patterns. It's about understanding the story that those patterns tell us about the balance of power between buyers and sellers.
So it's more about interpreting the psychology of the market than just memorizing formations.
Exactly. And that's where the real power of candlestick charting lies. It allows you to see those moments of fear, greed, indecision, the human element that drives market movements.
It's like you're learning to read the emotions of the market, deciphering the language of the bulls and bears.
That's a great way to put it. And the more you practice, the more intuitive it becomes. You start to see those patterns emerge, recognize potential turning points, make more informed trading decisions.
Well, this has been an incredible deep dive into candlestick charting. We learned so much from Steve Nison's book and your expert insights. Any final thoughts for our listeners who are eager to start using these techniques?
Yeah, candlestick patterns are a powerful tool, but they're not a magic formula. Use them wisely in combination with other analytical techniques, and always remember to manage your risk.
And keep learning. The world of candlestick charting is vast and fascinating. You never know what secrets you might uncover as you continue to explore.
That's the beauty of it. There's always something new to discover.
Well, we've reached the end of our deep dive, but your journey into the world of candlestick charting is just beginning. Keep exploring, keep practicing, and may your charts always be in your favor. Until next time on the Deep Dive, happy trading.